Welcome to the channel, guys. This is the video going to on mutual fund. Those guys who are starting to investing in mutual fund, a bit of information on that. Value research being one of the prominent and a good sites rely on the data on the risk ratio. So if you just started in the one thing, I'll advise you. First thing you need to understand what is equity and what is debt. That's all. But if you're so eager to get into stock market and particularly equity and if you never trade, whatever you want to, first thing would be understand what is equity and debt. Then within equity, we have cash buy for a long time, then we have intraday, we have options, we have futures, and then of course commodities outside. So what I'm trying to make you understand, if you're keen only to start in mutual fund because that's a more of a safe approach getting into markets. If you're interested in equity, you understand equity, I just want to get started on a mutual fund. Probably this will be a useful video to understand. So basically, if we go in the market, NSE or a BSE, we see the stocks as large cap, small cap, mid cap, flexi, hybrid. Hybrid would be equity and debt combined. But in case you're interested to completely at the moment in equity and you want to just explore a bit on mutual funds, so markets are anyway quite low in them, and probably it might go down enough. That's a different scenario. But if you just started started in mutual fund, so you see that, right? This is home screen, right? You can always choose explore all funds, but I'm not going to do that for now. But I'll look at, so these are the stocks, right? And then it would be funds, stocks at 52-week low. I'm not getting there. Again, I'm not getting there. The blue chips, I'll just funds to grow wealth. Okay, let's start with that. Okay, but primarily is going to be a video on mutual funds. Yeah, I'll just quickly look into that. This is horizon. Look at that. How many? So I'll advise here. You should always look long term. Of course, look at other part, right? Lock-in period. This one. The first thing is direct and indirect. Direct, right? Directly buying from MSC. The expense ratio. What is expense ratio? The charges you're giving to those mutual fund house to maintain your investment there. 1 lakh into certain mutual fund. With mutual fund one line is composition of various stocks. If you pick by a stock, pick by a mutual fund house, fund manager, that's collective, but they are just replicating an index like Nifty Future something, then it's called passive one. So normally the expense is higher for the active funds. Okay. So now let's take more than 10 years. Okay. And then we just scroll a bit. See what's a selected type is asking me. Do you have experience? No, I don't have. That's look. I'm looking from a pure perspective. I don't have any experience. Okay. Then that's what it is showing, right? A lot of mutual funds, right? If I go one by one, it will take a lot of time. What I'll do, I'll export in Excel. Okay. Let me just show you the screen too, so I export in Excel too. So I'm exporting in Excel. Okay. And this is a fund. Yeah. Let me just open that. This is the okay, so how we get started here, right? That you see a lot of fun, right? So that's a good thing they have done. I mean, they're only showing you according to them. You don't have any experience. So they have one thing they have already done it. They have pulled only the highest rated according to them. No, yeah. So with that, we'll just delete the first few rows. That's not required now. Yeah. So you can also put a filter and sort by maybe highest if you really want keen to that. Okay, and then 1 year return, right? For you can look one by one. So either you sort by rating and then root by return, right? Or you can do a multiple filters, right? Custom sort. Okay, but just look at the data. Okay, so you see your returns and expense ratio. Expense ratio should be important, right? You're just getting into market and you don't want to lose money. So I'll go by smallest to largest. Of course, smallest being the good. Okay. you can have your own set of expectation or understanding. Some people say less than 1 is fine, but if you ask me personally, I'm quite hesitant to give anything more than 0.6. So with that, I'll just remove the last one just for now. But yeah, nobody's stopping you. Yeah, and what we'll do, we'll just highlight with that color. We know what we're considering it. Yeah. So now with the expense ratio sorted, what I'll do now, 1 year return, I'll sort by top to bottom. Yeah. Okay. So if I do that, I still, luckily my funds that I chose initially just on expense ratio. Now with this, I also see there are certain funds. So I sorted by 1 year return. Of course, that's not a good way to do that. You can always look at other return 3 years, 5 years. Okay. Maybe 3 years makes sense. Let's sort it by largest 2. With that, what I see, with the largest 0.53, one fund stand out, Quant Absolute Fund. Okay. Okay, and then let me pick something else too. With the 3 years return of beating the market, then 30, 23. These all are quite good ratio, healthy returns. Now let's compare with Nifty 50 returns and just see whether how much the deviation is. But this fund stand out. We'll get into that. Did any other fund that stand out here? This one. Is it? No, it's from 3 years, but maybe it's a new fund. We don't know for sure. So look at 1 year return, top to bottom, largest, smallest. These are stand out. Okay. Let me just highlight again with a different color. We know the scope you're talking about. Okay. This stands out. Okay. Does anyone have expense ratio greater than 1? Yes, the second and third have a higher expense ratio. Something we already said, right? So I put it a red, okay, for now. But nobody's stopping anyone to do that. Since I see, why? But okay, look at all. This is a hybrid one. Normally, if it's a hybrid equity, that means it has a debt and equity. So that way, normally the expense ratio will be high for them. So that's obvious, okay. Now with that HDFC Children Guild Fund, okay? That's essentially a gold fund. Yeah, that's the way to look at it. So now what we'll do, we'll go back again, okay, the same website, and we'll put a different filter. Okay. Now with that, we'll go one step back, and I'll say 5 to, again I'll say more to, no, I'll say 5 to 8 years. Okay, but this time, okay, that's fine. So 5 to 8 years. Again, it's look long term. So maybe what I'll do, I'll just open the funds. Okay. Directly to home page again, and we'll explore a bit more. Okay. Getting into the mutual fund is important. Right? Once you park money, you don't want to be doing re-analysis, re-evaluation on those ones. So funds to grow health, we'll do again, or select years. I'll just say this time maybe 3 to 5 years. These are direct. Keep in mind, this is the one direct will buying it. For that, you can always Google a bit, understand what is direct and regular a bit more if you're interested in. Again, so with this, it seems like United States equity. Now with this, again export to Excel. Okay, Excel will do the sorting, but I want to show something different here. No, well, this is one of the good fund that I know of. I don't know how it behaves. What you have to look at. Okay, now you see that this is a 5-star. That's fine. You have to also look at risk. Okay, risk here, standard deviation, right? That's 1 plus standard deviation, 1 minus standard deviation. I expectation, right? Equity market going to be volatile. Sharp ratio 0.81. I don't like it. Greater than 1, I prefer it. Again, it's a less. These two factors are quite low. What we'll do, we'll look at the peers. Do we have any the peer comparison? Okay, and we see they have listed our equity saving Mahindra. Let me put HDFC equity saving. Let's see if that is a better. Go to the risk section, and if you let's load in. Yeah, again, okay. Here again, as far as I see, alpha is good. Okay, alpha is return greater than the benchmark. Yeah? Yeah. Beta is also is more volatile. Yeah. Beta less than 1 is less considered less volatile. Sortino is fine, but the Sharpe ratio is less than 1. Okay, so with that, we also look at, okay, let me just search on that I know of Canada Robeco. Canada Robeco blue chip, like that. Emerging equities, then it's a blue chip, or one fund that they call Axis blue chip. Okay, this blue chip fund. That one fund, what name? I just want to quickly see how that it matters on, especially on the risk part. So now coming to the risk of this one. So Sharpe is again is low. So no, that's not correct. Alpha is this. It is performing looks quite poor in the current market. So with that, we'll do now. So with that, we have picked another fund called Parag Farikh. This is another good fund, but yes, we have to see how that it fares. Okay, so with the risk, we'll get into return, or you can always download the data and look at that 6 months. You can just toggle it here, expectation the return, but I'm looking at the risk. Okay, the risk here, I said just look at it. The one of the good fund that we know for last 5 years and plus. Beta is very volatile, but this risk is a greater than 1. Alpha is 8. Okay? Again, the benchmark. The benchmark it has, this is the benchmark. Okay? Category is Flexicap. So you can just Google a bit what is the composition of Flexicap. How much large cap, mid cap, small cap. You can just have a look at there. Now with the look at the portfolio too. Once you have figured out the mutual fund, initially you may not know, but let's say you have an idea that no, financially you don't believe will go up in next 3 or 4 years, right? With that, so you can always ignore those funds if you're not interested. Yeah? That's one way to look at. I can always look at this HDFC, is well known. Right? Their bank, HDFC Bank, and it's lending one. This one, right? ITC, right? So ITC, most of you already know HL Technology SSB. This is the composition of the asset, right? You look at the composition and then you take a call based on the return risk and this peer comparison, that segment and which one suits you. With that, I think, hope it was useful for you guys. Thank you for being here.